Apologize for being late. We'll catch up. Martin, Fred, Mark, loud and clear. John, Fred, Steve. All right, thank you. Let's see. Okay. Then let's start. Companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Always want to welcome new subscribers. This is my brief bio. I really appreciate your time. Everybody who's coming back, the fact that you guys here means a lot to me, so I really appreciate your time. Disclosures are very important. Please read them. If you're new to trading stock or options, I encourage you to visit the link on your screen, optionscreen.com, so you understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Trading psychology is important, right? It's very important to have a trading plan. I encourage you to write down your trading plan so it's in writing and you can revisit. Also, if you don't keep a trading journal, I encourage you to do that at least for the next 3 months and then compare your results. I believe trading journal is extremely important. In a journal, I would write down, every trade that you do, why you getting into a trade. Ask yourself multiple times why, right, based on each of the answer, and then write down how much exposure you're taking, what are your target gains, stop loss, market conditions. Usually, I put down in my journal, and then I grade myself. Right, I would grade myself A or B. The goal is not to risk more than $250. On a $10,000 portfolio, right? On a $5,000 portfolio, $125 per position, and have only 4 positions. That would be the trading plan. That if you're still kind of learning how to trade and you're not very disciplined or you're not very confident, then I would start with no more than 4 trades, and the goal not to lose more than $250. Right? You can structure your trade 1-to-1, 2-to-1, however you want to. Right, that's based on your risk tolerance level, but never risk more than $250. Right, and usually you use dollar cost average. Right, you split the trade. Some people do it in 3 parts. Some people do it in 2 parts. That's fine, but that would be the approach, the most important. How do you determine 2.5%? You look at main support and resistance levels. Right, spiders continue to trade higher. Right, we do have a confirmed breakout of all-time high. Most people are extremely bullish on the market with the expectation that interest rates will continue to deteriorate. Whether you bull or bear, you do have a kind of a well-defined support levels. Right, you have a short-term support here. Right, that would be support number 1 around 480, 478, and you do have the medium-term. And then support number 3 is, I would say, long-term support. So depending if you're a short-term trader, you're thinking about hours, days. If you're a medium-term trader, you're thinking about days, weeks. And if you think about weeks and months, then so depending if you're long-term, short-term, or medium, your position size decreases, right? And $250 on $10,000 account, and I would split it into 2. Right, so if you're a short-term aggressive trader and your stop loss is 478, market opens at 487, 2%, maybe too aggressive. Some people might say maybe 1.5%, but let's let's be on conservative side. 477 is your stop loss. Medium term would be 467, 20 points. Right, and long term would be 30 points. So those are your stop loss, and then you just divide 250 by 10. Okay, I can buy 25 shares. Okay, here I can do basically half 12 shares. 30 times 7. So that would be my approach, right? And you have 4 positions like that. I mean, on one hand, market is overbought, and we're already kind of 20% up, similar to the previous rally last year. Continues to grind higher. Dollar is pulling back today, so that's positive. But I would have slightly bullish bias, right? The breakout is confirmed. Day 1, day 2, day 3, day 4, 487. We're basically heading to 500. Right, model did good job. Long-term model did good job. Basically, it's overbought, but we still have a week into the earnings. Netflix is up, so the trend can continue. Meanwhile, I did do another earnings strategy, so similar to 18.5 put, and I sold 18.5 call, collecting 14 cents, right, on $17 stock, almost 1% return. For now, AT&T is down, or at least was down. Let's just make sure. On earnings, they missed on earnings per share, but they beat in terms of subscribers growth. Right, probably one of the best quarter in terms of number of new subscribers since COVID started. Texas Instrument down 2%, AT&T up 3%, FCX is up 7%. Let's see, Apple's flat, Amazon is position. Let's do that. I think dollar is rolling over, silver is oversold. I think we'll probably have short-term bottom. And again, to determine the size, if we do reach 20, you want to be down less than $250, right? So if you're risking another $1 and I already have half a position, you don't want to buy, maybe you buy, depends on how much you were down at 20. If you were down $100, maybe you want to risk another $100 at 20, right? So you don't have to exit if we do retrace back to 20, right? That would be my approach, right? Because it might go to 23, or it might roll, continue the bottoming process, right? PPI is positive. Right, today PMI, manufacturing PMI. Does anyone have actual numbers? Can you guys look up what the actual numbers are? But I assume they're good, right? Positive, right? Shouldn't be negative. But let's see. All right. So meanwhile, if you did Netflix, it's up 10%, right? So it's on earnings. We did, I was talking about in the live trading room yesterday at the closing bell. You want to consider doing maybe 20% out of the money. So it's still, 10% out of the money. Let's see, Netflix 590, call is trading at 48 cents. So let's watch Netflix. Any questions on silver? All right, so AT&T I have to, for now, I have to, main concern is 15.5 put. So you don't have this, people gamma squeeze, right? Gamma squeeze of AT&T. Obviously, we're far out of the money. So, for now, the goal is to just close the put. So, cents, right? So I would just close the AT&T put, not take the risk. I mean, call is, I'll close it for 1 cent just to free up the buying power. Because selling out of the money puts and calls, they are very capital intensive in terms of requirements, right? Margin requirements or option requirements. So you want to free up your buying power and then move on to the next trade. So again, I basically paid 3 cents. You probably had 5 cents, 14 cents, so 9 cents on $16 stack, more than 0.5%. Right? Don't think about, well, a lot of people say, well, 9 cents doesn't make sense to me. Think about percentages, right? You have a goal of, 0.5%, 1% of your account value as weekly, monthly goals, right? Weekly goals should be 0.5% to 1%. That should be, but at least for me, if I can make 0.5% or 1% a week, I'm very happy, right? So on the stock, on the short-term trade, same thing. If I can make 0.5% to 1%, right, on the short-term trade that I hold for a couple hours, couple days, great. If I'm holding it for a couple of weeks, maybe 2%, right, or a month. So that's a silver trade, AT&T. United Airlines, I did close, right? So this was a good exercise to learn how to do delta neutral positions, right? It requires kind of this market maker mentality, right? You want to think like a market maker, right? The risk is unlimited on these short puts and short calls. So as delta increases and gamma accelerates, you want to be delta neutral, right? So we looked at 43 call, stock was at 42, delta 30, delta 35. Okay, you buy 30 shares. In this case, I wish it worked out a little bit better. It did drop, but I basically broke even on the options and lost a little, on those 30 shares of stock, $60. So, but that's a good practice, right? And the more we can practice, I think the better it is, right? To be kind of concept of market neutral. You can be market neutral on a position. You can be market neutral across positions, all your positions, right? You can achieve market neutrality using, Netflix continues to grind higher. Texas Instrument down 2%, AT&T. So I do have Netflix. Actually bought a small shares and continues to grind higher. So that's good. All right. But 3 candlesticks. We can look at yellow tunnel also. Let's watch some other trades. So aggressive power trader or active trader, you can find this on both sides. It's usually aggressive. So we have Travelers, WDC, and Mendeley's, right? So you would trade them just like similar to earnings strategy. So Mendeley's, Travelers, and Mendeley's, Travelers, and WDC. So IWM is up. It's testing that 198-200 breakdown. So that's positive. Germany is rebounding 2.5%. Spiders are up 0.5%, and QQQ is up 70 basis points. So positively received. Let's see. So same thing. Mendeley's, I would look at 5-minute chart. Travelers after earnings. Continues to grind higher, and then WDC, right? You want to look at support, resistance, the gaps where you would find support, and we have another 5 minutes to review. So it looks like LA Lily is another stock we're following. So 8:41, another 4 minutes. So LA Lily looks like retesting the highs, so that's good. Looks like a 4-1 reverse split on UNG. Thank you. The 350. Do we want a dollar cost average on the spread or establish this position here? So let's look. Down, right? So I already have a position, right? So in terms of the hedges, I mean, granted, it's March, and we are approaching pretty large two events, right? One is the earnings, one is the Fed decision on next Wednesday, where the market still has to reconcile this yield, right? I mean, we are getting to 4.08, which is important support. Maybe, you know, the market will follow the dollar, right? But for now, you know, I would say short-term, 10-year yield is in strong uptrend, and QQQ is in strong uptrend, right? We haven't had that, and it's been like this 30 days, right? So market has to reconcile that, right? In theory, after Powell's speech, for the market to continue to rally, yield has to drop. You know, and if it doesn't, then that could be the top for, you know, QQQ. Dollar looks like, you know, I mean, I wouldn't say it's broke the downtrend, but you know, it's trying to break the downtrend. So the risks, you have two risks. One is the speech, right, and one is the earnings. Earnings so far, you know, positive, right? The reaction to earnings, the bar is set low, and earnings are still, you know, better than expected for the most part. So I would say one position should be hedge. So my thought process, I do have 410, 400, which is in the money. So it's slowly deteriorating. Maybe, I mean, it's 50% off. I'm down 50%, right? I bought it for $3.15, and now it's trading at $1.40. So maybe after Powell, I mean, if Powell, you know, after next Wednesday, we'll know most of the earnings, not all, but most of it, and then maybe it makes sense to close 410, 400. The current one order that I put out of the money is approaching, right? But that's, you know, higher strikes out, right? So that trade is probably, you know, I would, you know, it's still 40 cents away, right? It's still 40 cents away. So I would keep an eye on this. I wouldn't want to change the price. If you don't want to have two contracts, right? It's a pretty big position. Each contract is, think about $40,000, right? Plus, you're risking $350. I mean, I'm already down $150 on first position. I probably don't want to have two positions, because then I could be down more than $250, which I don't want to. I want to avoid that. So if this gets filled, I'll probably close the other spread. Probably I will not, on $10,000 account, I would not want to have two contracts, right? If you have more than if you have $20,000 account, okay, maybe two contracts is appropriate. Thank you, Fred. PMI, SP manufacturing PMI 47.9, 47.9. What about the services? You have this services PMI? Oh, it's just hit the tape. Okay. So let's see what's the reaction. 5 minutes. Let's roll to 5 minutes. So dollar looks like rebounding. All right. So let me look. 10-year yield looks like rebounding. So maybe they came in worse than expected. Okay. So let's look. Pay attention to macroeconomic data like PMI data, right? That's important. So let's just double check. Right. 9:45 a.m. So that's 8:45 Chicago time. Okay. All right. Global manufacturing PMI 50.3 estimated 46.6. So much better manufacturing data. And services 52.9 estimated 51.5, better than expected. So both, actually manufacturing is an expansion. Back to expansion data. Assuming that data is correct. Well, better than expected, that's good news. But yields are vertically going higher, right? Why? Probably, higher for longer. If the manufacturing is expanding and services data is expanding and unemployment is low, why would Fed lower interest rates? So initial reaction, 10-year yield is up, dollar is up, and QQQ is, I assume, is down, right? And QQ pull back. Okay. We're back to expansion. This is great. If your bear, you think is higher for longer, inflation is going. Obviously, so there's self-serving bias, right? We all have self-serving bias. This doesn't make sense to me, right? And when it doesn't make sense to me, if something doesn't make sense to me, you probably want to hedge, right? At least you want to be hedged until these correlations start making sense, because they can diverge only for certain period of time. Okay, so in terms of active trader, okay, it's been 20 minutes, but it's good that we waited for the services and PMI data, right? So now you usually want to avoid doing day trading or short-term trading, right? Get into position right during these PMI, because it's gonna, bulls are gonna drive their narrative, then bears gonna drive their narrative. It takes time to settle their differences, right? So I mean, TRV has a good support. Right, it does have a good support. It had great earnings, right? So that would be my choice. Because for short-term trading, you have a stop at 210 or 207. So if you want to day trade, I would do 210. If you want to do something longer, 207, about $5, right? So if it drops to 207, I don't want to be down more than $250, right? So $5 drop, maybe, 20 shares, right? 5 times 20 is 100. So that's how I would look at the calculations, right, in terms of risk. At these supports, either 210 or 207, I don't want to be down more than $250, depending if you're planning to hold it overnight. You're probably not going to drop to 207 today, so that doesn't make sense, unless we have a big reversal. But 210 is more. If you're more conservative like I am, you would say, okay, 207 is good enough. So that would be my proposal. ERV, buy. I don't want to get down $100. So 207, $500. Okay, 20 shares. Not the most liquid name, so that's the problem. That's why I usually don't like to trade illiquid stocks, but modeled it, detected. Let's see what's the average volume. 1.5 million. So I mean, it's not horrible, but not the best thing. Okay, fine. So I'm in. That's how we trade aggressive power trader or active trader. I'm looking for 0.5% on half of the shares. 0.5% would be around $1, right? So $213.50. And I would look, depending on how long you're planning to hold it, anywhere from 1% to 2%, right? Probably not going to move 2% today, so that means you're willing to hold it for a few days or maybe a week. 1% is possible. 1% is possible. So that would be $4, $216.40. Okay. So Netflix, I did again delta neutral strategy. So if you have 100 shares, the the short call was about 20-30 delta, 0.20, 0.30. So for $1 move in underlying stock, option would move, 20 to 30 cents. So at this point, if you bought the stock, if you're up $10, I would close the short call and close the short stock. Long stock. Kind of built a neutral strategy. I closed my short call. I left a little bit because I think Netflix will do a catch-up trade, right? There are already pieces that consolidating, right, since July. Didn't make new high. You have earnings, broke out. It's probably higher highs and higher lows, right? All the way to whatever, 600 until, we have pullback. So, but at least I know what my stop losses are, right? If it drops below $8, yes, I can buy maybe 2 shares, maybe 3 shares, right? Invest maybe $1,000, $1,500. It's a volatile stock. But, for now, it's clear. The reason for continuing PMI was as expected. I don't know about PMI I don't think it was expected, right? There are two narratives, right? So if it's a bullish narrative, then it makes sense, right? That's what Bull said. We want PMI to expand more, right? So the Bull's narrative is that PMIs will expand, especially services and manufacturing will start expanding, right? And we will avoid recession, and this will be a soft landing, and Fed will lower interest rates, right? And we're heading into a mild recession. So macroeconomic data does not support their narrative, but it does support that, at least short term, why would Fed lower interest rates? Why would Fed lower interest rates if economy is expanding, unemployment is low, and there are still pockets of stubborn inflation? We don't want to repeat 70s and 80s, right? So that's kind of still something that the market needs to resolve, right? I have a feeling it's going to be resolved, either after Fed meeting or when Apple and Microsoft are going to announce earnings and we have February expiration, right? which is, we're approaching that a few weeks away. But for now, 10-year yield is, we talk about this 4.08, right? Kind of I would say medium-term support on yield. As long as yield continues to grind higher, it doesn't really make sense. Why does the market, we are trading basically, I've talked about this in the past year or year and a half, is that bonds and equity, right? Usually bonds, if people buying bonds, they're selling their equity position, or if they're buying equity, they're selling their bond position, like today, right? TLT is people are, well, they're kind of flat today. But before that, right, the TLT was down. Right, TLT is down, right? So that means throughout January, everyone is selling bonds and they're buying equity, right? And that makes sense. But that's not the relationship that was there in the past 2 years. That relationship is broken. So we either trade in a new environment, right, where people are not concerned about inflation, they're just concerned about recession, right? So people are going to sell bonds, interest rates will continue to go higher, right? And technology is going to go up, right? The problem with that narrative and this correlation is that, if inflation comes back and interest rates are too high and Fed is not lowering them, then, you can have a big surprise. So for now, yields are higher. Dollar is lower, so that's good, but it's still kind of reversing. So we'll see. Red 408, not 469 BBP. The BEP to 423 to 403. So QQQ, let's see. I'm not sure. So QQQ that I'm rolling, I'm basically rolling the strikes up. 430 from 420. So I have 410 and 440, right? And now I'm rolling them up to 430 to 420. I'm not sure what 406, not 403. Sorry, Fred, maybe you can explain. Bob, okay. This is flat. Thank you. CSX is flat, NGD. General Dynamics is up 5%. There's definitely divergence, but IWM is a lot more sensitive to interest rates, at least for now, right? So there's divergence, right? QQs are up 70 basis points, but both spiders pull back, IWM pull back. So we're, they are pulling back, right? They are pulling back. I mean, IWM has been underperforming, large cap, technology spiders, and it broke through this uptrend, and now it's struggling to break through the uptrend, right? It's struggling to break through these levels. It's also important, right? That this feeds well into bearish narrative is that, the participation is still kind of, I mean, we did have a big rally in the past couple of days when we broke out. But MMFI, if you look at the weekly chart, right, it looks like it's kind of rolling over, right? So, I mean, it's bouncing. So, you could have reverse on back up, but followed by big pullbacks, right? I mean, every time we reach this 90 level, right, where 90% of the stocks are above 50-day moving average, you had a big pullback. So far, there's no pullback, right? And we do have a broadening, like small caps participated, IWR, but small caps are struggling to break through this overhead resistance. So this divergence probably will not last for too long. Sometimes it lasts longer than people can stay solvent, right? I know some hedge funds that almost went bankrupt by betting on this, reversion to mean. But this, reversion to mean, you don't know when it starts, right? So for now, this is kind of a classical example where small caps are underperforming, and we'll see. All right, questions. IBM Iron Condor, yeah, I'm gonna look. I mean, there is no closing bell. There is closing bell today, so we'll look at IBM, and I'll do my homework on other stocks where less risk, so and implied volatility justifies taking the risk, right? So see if we can sell vol, kind of like what I did on AT&T and United Airlines. So I'll do my homework. We'll do that at the closing bell. Please watch Elite Circle. You'll see these orders. You can enter your phone number, and also watch it on Earnings Power Trader on Yellowtown, right? It's the same trade. So we'll in orders you will see which exactly stock or option I did. I do like IBM. It's in strong uptrend and broke through the support, continues to go higher. Yeah, Iron Condor makes sense. On one hand, all the good news is probably already factored in, but on the other hand, it's extremely strong. People not gonna let go of it easily unless they have disastrous earnings. So far, no big surprise. And you do have Germany participating today, right? Europe participating today. And China and all these stimulus stocks kind of looks like shorts are getting squeezed in China. So I mean, the only thing I would watch is Bitcoin, right? This is another, basically say about Bitcoin as a proxy for risk taking. It's breaking down 50,000 and broke through the support, right? So the longer it stays below this gap, then the higher the likelihood that you can have a significant breakdown. Next level is probably 30,000, right? So it's possible. So that is, so it's not green light everywhere, right? You have somewhere you have green lights, somewhere you have red lights, right? So I would pay attention to that as well. All right. Meanwhile, VIX, there was a big also divergence, but this divergence now got resolved, right? Market was going up and VIX was going up, right? That also didn't make sense. But these, but then they do revert to mean, right? Nothing really happened, and VIX back down, 8,500 range on S&P until something else happens. Mark, thank you. All right. TRV is staying at the same level. Mendel is down. WDC is higher. FCX up 5%. Netflix up 13%, Texas Instrument down 3%, AT&T down 2%. Let's review this gap, so that's good. CCJ looks good. We talked about silver, right? Looks like silver also found a bid, at least short term. EWJ continues to grind higher to all-time highs. LA Lilly continues to grind higher. Let's look at the cost basis of LA Lilly. Maybe it makes sense to lighten up a little bit. What is it trading? $637. We were at $641. Probably should have closed half of the position. Do I have any open orders? Oh, I do. I did 650, 660. No, I was in 1% of 650. Let's change it to 644. 644. So I'm changing on half of the position to 644 to exit out half of the position LA Lilly. It's facing overhead resistance at 650 level, 645 level. Earnings is in 2 weeks. Meanwhile, let's see, any other positions make sense to review. Bell Market Ready Muffin, welcome. Bell Market Ready Muffin. All right, so there is no Discord because I'm traveling, so there will not be Discord on Thursday and Friday. I mean, there's never Friday, on Thursday. So we're going to take a break on Thursday, and then we're going to come back on Monday. See you next Monday. Tomorrow. Well, Mark. Okay, and go to webinar. Let's see, let's just review the rest of the positions so I don't forget. So we talked about CCJ continues to rebound, found support, so okay. EWJ continues to grind higher. Japan, LA Lilly going into the earnings. I mean, ideally, I want to close half of the position. Right? Capture this 2% and leave the other half. There's different subscription levels. You know, some people come from more. You know, more than half people are not comfortable trading options. Then I would, out of 4 positions, at least one I would have as H. We talked about silver. Added to silver. I'm out of AT&T, the earnings trade. Yeah, United Airlines, these options will expire worthless. And that's it. And I'm out of Verizon. So TRV kind of not going anywhere. If you're day trader, I would watch 210, maybe get out at 210 if it drops below this level. And, you know, if you did the way I did it, like watch this gap, you know, this support is extremely important, right? If it drops below 206, then so at 207, I would, you know, if you're down less than $250, I would think about it and see how the market looks, right? If this is just a healthy pullback and it starts coming back up, okay, then maybe at that second half of the position. That would be my strategy on TRV. Meanwhile, here yield continues to go higher and better than expected. Services and manufacturing PMI. That does make sense. There is no reason for Fed to lower interest rate in March, nor in June, right? We need to see how the market is going to react to that, right? If Powell comes out next Wednesday, you're basically saying, guys, you're a little bit ahead of yourself. I mean, 10-year yield could continue going higher. I mean, there is a lot of overhead resistance, right? So I'm watching basically this breakout right back to August of 23, 4.30, 4.35. I mean, it's struggling. For now, it's staying at 50-day moving average and 200-day moving average. But if it breaks above 435, I think market is going to be in trouble. If it stays below 435, 440, then I think it's higher highs, higher lows. It could get choppy, right? Market could get volatile if we do have another jump to 430, 440, but the bull narrative at least still going to be intact. If we go back above 440, then it's a problem. Dollar, dollar continues to grind lower. So at least dollar is pulling back. Below 200-day moving average, was below 50-day moving average. If we break this uptrend, then that would be positive for the market. VIX deteriorating. QQQ up 1%, SEM is up 2%, spiders are up 0.5%. Excuse me. All right, any questions? All right, guys, you're wonderful. Thank you very much. There's a closing bell today. There's morning bell tomorrow, but there's no closing bell on Thursday and Friday. So Thursday, Friday, no closing bell. Thank you very much. Thank you for your support, and I will see you at the closing bell. Thank you.